Hey everyone, welcome back to our news trading session tonight. So we're swapping things around here because our schedule are pretty tight for December. And I think it's a great idea before we get started with the NFP numbers tomorrow and the CPI next week. Let me know if the audio is coming through okay. Should be coming through okay from my side. Okay, so my name is Vira Jaro. Let's get this started with our news trading session. And tonight we are going to be talking about the theory and practice. And yeah, a couple of interesting discussions to talk about in terms of how news has been impacting 2024. And the last 2 months has been pretty significant in terms of the unexpected news that has been coming out. Okay, just a little bit about a disclaimer here. Any opinion discussed in this webinar or linked to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility. Market reaction to news can be swift and unpredictable, which leads to higher trading risks and delays in order execution. So be very attentive when determining the volume of your transactions and consider all possible risk factors. All right. As per usual, there are going to be bonuses for participants tonight. We will provide you with a promo code to double your deposit bonus. Make sure you use the code because you're running out of time. We only have about 4 weeks to use the code. So yeah, we'll share this in a minute here, and you should already have access to the private Telegram channel if you have attended our news trading session before, or you registered through email. You should be registered through the website. You should be receiving this on your email. If not, please contact customer service. More than happy to give you the link to access the private Telegram channel. Okay, so this is the code, NONFARM 2024. And again, the promo code expires on the 31st of December 2024. So you haven't used it for this year, make sure you use the code before it expires on the 31st of December 2024. Again, the code is NONFARM 2024. Make sure you use it because it gives you double deposit bonus, okay? All right. So a little bit about myself. My name is Zera Njaro, and I've been a full-time trader with over 20 years of experience, 22 to be exact. And I've been a professional trading coach and technical analyst since 2007. My expertise is in the Ichimoku Kinko Hyo technique, which is a Japanese charting methodology. And I've also been invited as a guest speaker at Trading Investor Expo across Australia, Sydney, Melbourne, Perth, Brisbane, Adelaide, across Australia. And I've also been invited as as a panelist for InvestFair in Singapore, as well as the ATAA and the APTA conferences, which is the Australian Technical Analysts Association. All right. So tonight we're going to cover a few things. Obviously, we want to talk about the advantages and disadvantages of news trading, and we want to talk about some of the profitable news for trading as well. And special focus is definitely the three main phases of price movement, because we need to understand these phases of movement before really trading the news trading that we have here. Okay, all right. So let's talk about the advantages first. With the advantages, I think all the necessary information can actually be found in the economic calendar. So there's actually no need to delve deeply into technical and fundamental analysis. Okay, just a quick reminder that news trading might sound like it's a fundamental analysis thing. It's not. Okay, so news trading is actually a separate thing that we do. It's not really fundamental analysis. Fundamental analysis when it comes to Forex is obviously understanding how the economy works, whether or not the economy is strong enough to sustain that currency strength. But news trading, it's really more on how the market react to a certain news release. Okay, so it's not really fundamental analysis. Might be similar to fundamental analysis, but it's not. Let's just be clear about that. And news trading, do you need technical analysis with it? It would help you, but not necessarily a necessity in terms of how to actually trade the news. Okay. Economic calendars, you can find a lot of sources for this. Octa does provide an economic calendar. You can actually go to the Octa's website there, and I believe it's under education that there's actually an economic calendar there for you to use. Okay, but there's a lot of other sources out there. You can use investing.com, you can use Forex Factory, you can use Trading Economics. I like to use Trading Economics. It's just quicker in terms of data releases, and you can check out the historical data releases easily as well. So that's my preferred access for free um, and good economic calendar. All right. Second thing, which I would consider the advantages, is that the events and calendars are ranked in order of importance, which helps in making adequate decisions. Again, not all news releases are going to carry the same weight. We have low impact, medium impact, and high impact news. These are basically the filters that we have here, and a lot of traders are focused on the high impact news, okay? And also in terms of regional news, that will really depend on what you're trading as well. So if you're not trading the Japanese yen, for example, you probably wouldn't pay closer attention to the Japanese economy and what their releases are. I don't trade Mexican, so I don't look at Mexican news releases. I don't trade Indian rupees. I don't look at Indian news releases, okay? But if you're trading in the major currencies, you would probably definitely want to have a look at the US economy, the Eurozone, United Kingdom, Australia, Canada, Switzerland. Those are going to be a primary focus for news releases to be focused on, okay? Now, third thing is that publication of statistical reports noticeably increases volatility, and this allows traders, especially short-term traders, to potentially earn significant profits in a short period of time because, news releases, market does move quite a lot compared to when there are no news releases and market is a little bit on the quiet side. All right. The other advantages that we have here is the simplicity of that strategy that we typically use for news trading, and we are going to be discussing how to actually use those strategies. You basically have to know how to open and close the orders, right? Whether it's setting up the order or whether you're going to be opening up on market. But yeah, as long as you know how to click and buy and sell or set up these orders, set your take profit, set your limit orders, set your stop orders, set your stop losses. That's basically all you need to know, right? We actually don't use a lot of complex formulas when trading the news. A reason being is we need to react really quickly to the news releases, and we don't have a lot of time, to kind of calculate after the news what's happening, okay? All right. Next advantage, it would be minimal time expenditure on your trading. You basically know exactly when to access your trading platforms, when the volatility is actually going to happen. You're going to be avoiding a lot of the quiet moments in the market. So if you want to maximize your trades, then yeah, you should take advantage of news trading, because in the typical day, where you see the most movement in the market is basically when news releases are published, right? And in terms of what actions to do, we are going to be covering that tonight in terms of the theory part. But yeah, trading process itself can be completed in just a few minutes. And if you want to experience live trading with me, tomorrow we're going to have our NFP session, and you can basically how we set up the trade. Typically 5 minutes before the news is released. That's where we set our orders, and that's it. In fact, we can do a lot of currencies before the news is released. So we're now focusing only on just one, and then kind of miss out on the other opportunities that we could have, okay? All right, so those are going to be the advantages. Let's talk about some of the disadvantages first, okay? It might seem like there's not a lot, but it's actually kind of a huge disadvantage that we need to consider as well. Number one, the market situation doesn't always develop as predicted by logical thinking and common sense. And the reason why this is the case, because news trading is somehow still linked to fundamental analysis, we need to look at the context of the news release, right? We need to kind of know or understand what is the market expectation and how those news releases could actually impact the market in the long term. Sometimes market is not looking at the longer term view. They're really more reacting to the short term volatility, the short term concern in the market. And typically when that happens, sometimes, bad news could be good news could actually be bad news. This is the part where a lot of traders look at news releases and they kind of avoid it because sometimes it just doesn't click. It just doesn't make sense sometimes in terms of news releases. So you have to factor that in as well. Now, not all news can cause significant reaction. We already talked about that, depending on the ranking of those news in terms of impact. Sometimes it doesn't move the market. And you know what? Sometimes a high impact news might not even move the market as well. If it kind of meets consensus and there's not a lot of expectation or surprises in the market, it might not move the market. Okay, so when you see a lot of volatility during news releases, they're typically due to surprises in the market, things that are not priced into the market. They cause a significant reaction in the market, but if it comes out as per consensus, there's plenty of time for traders to prepare what's going on. It might not move the market. So just keep that in mind, okay? So not all news releases, even though if they're high impact, could actually move the market. And we have been in a couple of situations this year where news is released, it comes in as per consensus, and we don't see a lot of reaction. In fact, I think we just saw one last month during the NFP or CPI trade. It is as per expected. We don't actually see a lot of price movement, so that could cause worries in the market. It might not move according to how it should have been. Okay. And number three, if you're not able to accurately anticipate the market direction or analyze the situation incorrectly, you may experience significant losses. Okay, so just keep that in mind. A lot of new traders are attracted to news trading. And I think it's more of people selling the dreams and telling people, oh yeah, if you trade the NFP numbers, it moves so much, you could gain so much. At the very same time, that volatility, if you are on the wrong side, it could actually hurt you significantly. And I've mentored a lot of traders. From my experience, about 80% of new traders typically they lose their account because they were speculating a huge position on news trading, hoping that if they're right, they're going to be profitable really quickly. But yeah, if you don't manage your risks, it will quickly kind of destroy your account as well. So just keep that in mind when trading the news. Okay. All right. So I want to talk about the most profitable news for trading. So there's actually, division in terms of what kind of category those news are going to be, right? So we have the hot, unexpected news. This could include terrorist attack, military conflicts, natural disasters, and in recent times, any comments coming out from Trump, that would move the market. And you can see the move there today in particular, this morning in Asia. You can see how Bitcoin kind of went past that 100,000 threshold. It's really more of a lot of factors being taken into account, like the head of SEC, being nominated by Trump. This guy is pro crypto, and that's why crypto community are looking at that and say, hey, that's a good rally. And then we got Russia's coming out from Russia as well in terms of being pro-crypto as well. Those are going to be moving the market significantly. And these are unexpected news, right? This is not scheduled. We don't know what Trump is going to tweet next, but a lot of stuff has been happening. In fact, I think in just the past week, there were threats coming up from Trump in terms of, BRICS, for example, or any other currency that tries to replace the US dollar. They're not going to be doing business with America. This kind of comments like this would fall into the hot or unexpected news, right? These are going to be your hot news. This is going to be your flash news, all right? Incidents like this, they're unpredictable, and it could hurt your position if you get it wrong, or it does cause a significant shift in sentiments as well. So it's always good to be aware of what's going on in the market in terms of whatever you're trading, right? If you're trading the crypto market, make sure you tune in to crypto news. We try to update you with news as soon as we can. If there's any high impact news, like how the market has been doing. There's a lot of updates on the Telegram channel by Octa as well. So make sure you actually read this, because I think a lot of traders actually don't even bother reading the news. They kind of put themselves in a bubble and not really care about what's going on in the world. I think that's a wrong perspective, especially as a trader. Constantly, we need to be aware of all the situations that's happening or developing that could actually impact the market there in terms of the financial market. For example, let me give you something from Korea, for example. If you guys haven't read, it was really a really weird moment. Comes in late at night, and South Korean president basically enact a martial law. And within 3 hours, it was kind of rejected by the lawmakers, and there was a lot of confusion in the market. Why was he doing that in the first place? There was no need for martial law. So it was really weird stuff happening there. Does that impact the market? Yeah, it does impact the Kospi. It does impact the Asian market as well. Obviously, it impacts the Korean won against the US dollar and against all the other currencies. Yeah, news like this, it just pops out. It could happen very suddenly, and it becomes a headline. For example, Bitcoin today surpassing 100,000. Well, probably the common people wouldn't know what's going on until maybe tomorrow or 2 days after. But crypto traders needs to be on top of that, because that break above 100,000 does have significant impacts onto all the other cryptocurrencies out there as well. All right. So those are your unexpected news. And we also have the periodic news that comes out regularly. For example, central bank meetings and monetary policy decisions. Forex market reacts to them by raising and lowering rates. Quarterly GDP reports, right? Those are happening. Just give me 1 second. Okay, so yeah, quarterly GDP reports, inflation index, CPI, PPI, core inflation. These are the stuff that we're going to be waiting for. PPI just got released last week. CPI is going to be released next week. These are going to be, very important, right? Because we need to know whether or not the interest rate right now is the right interest rate. If the CPI numbers comes in higher, does the FOMC needs to be cutting interest rate, or do they need to maintain the interest rate? These are the kind of decisions that we need to look into. This month, though, is a little bit unique because the FOMC I think it's scheduled to have the interest rate decision before the CPI. So yeah, something to look at as well. All right. Index of business activity. We just had the ISM manufacturing PMI on Monday from the US. That was a good surprise to the upside. We had the services PMI yesterday. Unemployment data. This is going to be released tomorrow, and the main focus for our monthly trade, which is the NFP numbers. We're going to be looking at the NFP numbers. We're going to be looking at the unemployment data. We're going to be looking at the average hourly earnings. This forms the labor market news, right? So that's basically what we're going to be looking at for tomorrow. These are periodic news. We have our consensus. We have our schedule. We know to a certain degree what to expect. We're not really in the blind. We know when they're actually going to be released. Not really a huge surprise in the market, like the martial law, for example, in Korea, tweets from Trump that impacts the market significantly. Those are on schedule. We don't know when they're actually going to be released. So this is news trading. All right. If you want to trade based on those news, for example, if you're on Twitter, you get Trump's tweet, immediately react to it, then you're on top of everyone else. You basically traded the news there just based on his tweet. You know how to react efficiently. All right. So yeah, are this going to be profitable for you if you're aware of it? Yes. If you know how to act, yes. And I think the most important part is, in terms of news trading, is actually reading what the market is expecting. Okay. So that's basically what news releases are. News trading is basically figuring out the sentiment in the market, kind of siding with the majority of the market that could actually take the market in one direction or the other. Okay, so those are going to be your most profitable news for trading. Okay, so let me pause for a little bit. Okay, so Now we want to talk about price movement. This is actually very significant. And the logic behind the price movement that we have here, it's basically the logic behind where the big funds or how the big funds act. Okay, let's take a look at the accumulation phase. So the way we put it here is that during the accumulation phase, the most informed and forward-thinking insiders enters here. That's the big funds. That's the way they look at the accumulation phase. For them, this is an opportunity to get into the market, right? They need to kind of layer the positions. And the reason why they call it accumulation is if they want to go long, they want to buy something. This theory actually comes from the stock market, right? Unlike the forex market, with the stock market, there's actually volume and liquidity that a lot of traders need to focus on. So if they want to buy NVIDIA, for example, which you can also trade with Octa using the MT5 platform. For example, if they want to accumulate NVIDIA stocks, they can't just say, all right, I want to buy 50 million worth of NVIDIA, take my money, walk away with it. No, it doesn't work that way. There's actually going to be limited quantity, especially for hot stocks like NVIDIA. A lot of people want to hold on to NVIDIA, for example, right now. A lot of people want to buy into NVIDIA stocks, right? So demand is high. This is the reason why price is high as well. At the same time, supply is actually low. So for a big fund to kind of accumulate that 50 million that I just said, for example, they want to buy in for 50 million worth. They can't just chuck in 50 million in one trade and it's all filled for them. It doesn't work that way. So basically they need to layer the position. They might actually get, for example, at 135 and then another position at 138, another one at 140, and then the market kind of just move in a range bound market condition. They move back to 137, they jump back in, 134, they buy back in again, 130. They're basically just building up their portfolio. And that's the reason why it's called accumulation. It's basically accumulating positions, right? That's the big funds. For retail traders, especially new traders, they look at the accumulation phase and they say, oh, you know what, this is not tradable because it's just market being very choppy, it's in a range-bound market condition, it's in a sideways market, my strategy doesn't work. Trend following traders, they die during accumulation phase. Simple as that. If you only have a strategy that trades according to the trend and the market has to be trending for it to be accurate, then you're going to lose a lot of money in the accumulation phase. Problem is, as I said, a lot of retail traders, they only know how to trade when the market moves in a trending phase. Okay? So the accumulation part, not a lot of retail traders are going to be there. Okay? All right. Number two, we have the participation phase. You can see from the chart here, it's starting to move. There's a breakout that's happening, and that breakout happens during participation phase. Now, basically, retail traders or any traders that's technically driven based on price will enter here because there are patterns being formed, there are trend lines being broken, there are ranges being broken. It's more of a breakout scenario. Market starts trending. Everyone with technical know-how, they will jump in during that participation phase. Okay, so we've got phase one, phase two. So phase one, people that know what's going on, they jump in there. Phase two, technically driven people based on price movement. There's a breakout, they jump into this trade. So right now there's two people in the market right now, the big funds and then some of the more advanced retail traders that starts coming into that participation phase. Okay, now typically during these releases, we might actually see the trend kind of strengthen, right? So let me give you a little bit of a logic here. So for example, the US economy right now, it's actually not doing too bad. Okay, so the US dollar has actually been gaining and people has been accumulating positions before the Trump election. Post-Trump election, we saw the US dollar kind of boom, and then we saw a deep correction as well. Those are going to be accumulation participation phases, okay? Now, once the US dollar, for example, gets stronger quite significantly, then a lot of traders that don't understand what's going on will start following traders that has said, they have bought in during the participation phase. they're making such and such, then everyone else starts jumping into that trade. That becomes the distribution phase, right? This is where public enters by receiving outdated information. Now, at this phase, this is where the smart money or the big funds actually start selling the positions to the less informed investors, okay, leading to a potential reversal. So you actually want to avoid, when the market is rallying significantly, you actually don't want to buy in because you'll be buying in at the very top there. I could give you an example here on how we actually look at this. Let me just bring you into how the crypto market is moving right now, okay? So you can see what's going on here. What do you think is it's actually really going on here? If you kind of zoom out and see what's going on here, right? So there's the distribution phase that basically start in at the beginning of April, right? This is actually your distribution phase, okay? Now, your technical participation phase actually starts here, right? Once this trend line was broken, this is basically the participation phase, and the rest of this, you can see it's starting to match with what we just talked about. There's accumulation, there's participation, and then there's distribution right now. Price is pushing up higher, but a lot of people actually start jumping in at about 95,000, above 90,000. Those traders, take a look at the gain here, and I want to be clear because I don't think we've actually done this during theory, that I actually explain what's going on here. If you accumulate positions here, I'm not saying that you kind of picked at the lowest bottom, for example. So let's say halfway through, and we'll drag this to the highest high. That's 85% gain, right? If you had traded during the breakout above this trend line, which happens on the 14th of October, you'll be up by 57%. And if you jump in, because everyone is jumping in, let's say about 90,000 people jumping in at 90,000, the percentage gain, it's actually pretty small, and it's actually it becomes a risky trade for a lot of traders, right? So let's go with 90,000 and go with the highest gain there. It is about 15% gain. So you can see the difference here. And yeah, it's a simple notion here. Those that are patient, those that are longer term position traders, they typically tend to gain a lot more in terms of percentage gain. Okay, so because you jump in, you start accumulating positions for a good 6 months, you're actually doing a lot, right? You kind of just building up your positions for 6 months, waiting for technically driven guy to come in, with a breakout, and they start jumping in, they start pouring money, they start telling their friends, hey, let's just jump into crypto. I'm already making, at that point in time before the participation phase, for example, they could be making I believe about 10-15%, about 20%, like 15%, 20%. They tell everyone, hey, just start jumping in, and then push this price up. You get the whole idea. So you understand how the market kind of moves with this kind of news, right? Okay. So yeah, those are basically your three main phases of price movement. And you can see what's going on here. We got the accumulation, participation, and distribution. And I just basically shown you how those formations are, especially in the crypto market. We're looking at basically the same thing. Okay. All right. So a couple of general news for news trading as well. You want to study the market and analyze the dynamics of currency pairs. So if you're focusing on the Australian dollar, you should understand how does the Australian dollar move. They move in a range-bound market condition. It's rare for them to actually trend a lot in a short period of time. They trend slowly in the longer term period. Right? Dollar yen, very volatile. Trend could change within the day. Euro USD and Pound USD, again, a little bit more on the volatile side. They change trend a lot more than the Australian. And typically for the Pound USD, they trend a lot more. The Euro USD, there are times where it's actually trapped within the range, like about now. It is kind of trap around the order block that we have right now in the daily time frame. Okay. And then you also want to assess the reaction of currency pair to that latest news as well. You also want to prepare for trading by marking relevant levels on the chart before the news is released. This is very important. And you also need to decide on your trading tactics, including when to open and close the order. Okay, so do you want to open before the news is released? Do you want to open it after the news is released? Or do you want to open it during news releases? Right? Typically, we do it during news releases on the breakout scenario. And you also want to choose an appropriate trading time frame as well. If you are trading short term, you don't want to stay for more than 5 minutes. You shouldn't be looking at more than an hour's chart. All right, you should be looking at maybe the 50 minutes time frame, for example, or the 5 minutes time frame. If you trade intraday, then there's actually no point for you looking at on the daily chart because it's irrelevant to you. Okay, so you need to choose an appropriate trading time frame as well. You also need to determine the maximum risk for each order and consider using stop loss as well as trading stops if you know how to. Okay. And also decide on the terms of the deal, okay, whether it's actually going to be a quick trade or long term lasting for more than 1 hour. Typically during our news trading session, I want to get out within the first 5 minutes. Okay, if I can get out within the first 1 minute, I would do that on a heartbeat. All right, given the opportunity, if I'm profitable, market moves significantly within 1 minute, I'll get out. And I think our trading record was actually 58 seconds. We actually stayed within less than a minute before we actually closed the positions with a very good profit. Typically, I don't really like staying for more than an hour after news releases. For example, the trade last month that we did, market doesn't react to it a lot. So within the first 30 minutes, we don't see a lot of market reaction. We got out of the trade. Some of the trades would actually reverse as well. So we need to see the immediate reaction in the market, okay? All right. Okay, so here are going to be some examples of pending orders, and I want you to understand the pending orders. It does take time for you to understand, and this is how we're actually going to be trading our news releases. So basically, news releases, we like to use the stop orders. So we will do a buy stop, which is an order placed above the current market price, and you expect price to continue to rise up. We want to use the buy stop. So basically, if you're expecting a breakout to the upside, we want to be using the buy stop. The sell stop are basically order placed below the current market price, and you expect price to continue to go down. This is a breakdown of a range. That's when we want to use the sell stop. So think about it this way. It's not easy to remember, but if you're thinking, okay, I want to trade a breakout scenario, it's straightforward. I want to buy. If price continues to go up, then it'll be a buy stop. And if you expect price to fall and break down, then use the sell stop. Okay, so those are going to be a buy stop, sell stop. So think about them as you are limited in range and you expect price to go out of this range and then continue to go in that one particular direction, then you want to use the stop orders. Okay, the limit orders are different. If you think that market is not able to get out of the range that we have here, if it hits the resistance, it will come back down. Then you want to use the sell limit. You want to sell when price hits that resistance. Then you'll be selling at the very top. Okay, same logic as well with the buy limit. If you expect the support to hold and you want to buy in at a very good price, at a very low price, then you use a buy limit because you might not be in front of the computer when all this happens. You might be busy doing some stuff, right? This limit orders or stop orders, these are called pending orders. Once they're set, you can actually close your terminal, walk away, and if price hit those levels, they will trigger these pending orders, okay? So those are going to be the 4 pending orders that we have: the buy stop and the sell stop. These are going to be a breakout scenario. And then we have the limit orders. Basically, if you expect that market is going to be capped at a resistance or supported at a support level, then you want to sell high, you want to buy low, then use the limit orders, okay? Limit orders typically means that you kind of need to understand what's going on in the market from a technical perspective. If you're not able to understand how to read prices, then it's going to be really hard to use the limit orders. Okay. All right, so let's take a look at a buy stop and the sell stop strategy here. And the reason why we talk about the phases that we have, we basically want to have that corridor volatility before news is released. The worst case scenario is, that could happen before a news is released. It's basically when markets started moving quickly before the news is even out. Either there was a leaked information or there's final adjustments to the expected results. All right? We don't want that. And typically when we don't have that quiet and calm before the news is released, we don't use the buy stop and the sell stop strategy. Simple as that. One requirement is we basically need the corridor volatility. If we don't have the corridor volatility, market is not in that accumulation phase, there won't be any breakout for you to trade. So just keep that in mind. And this is the reason why we skip some currency pairs, or we might actually skip a trade completely if the market starts moving in one direction before the news is released and there's no corridor volatility that we can take advantage of. So the buy stop and the sell stop strategy will not work if there's no corridor of volatility. If the market is not in a range-bound market condition, you're not able to use this strategy, the buy stop and the sell stop strategy, or what we call the straddle, if there is no corridor volatility. So in this example here, you can look at the Euro USD here. You can see the corridor volatility. Market goes in a range-bound market condition. All right, very simple. And you can have your buy stop and you can have your sell stop above the corridor volatility, above the high and below the low. That's basically where we want to place your buy stop and the sell stop. Now, this is basically during a news release. And you can see the buy stop has been triggered. It activated the buy stop. You're in a buy position. What happens here is basically you need to cancel your other orders, okay, to avoid whipsaws. If you have a buy stop being triggered and you didn't close your sell stop and you see a whipsaw in the market, it could actually open the buy and the sell at the same time. It could cause your position to be hedged in a loss, okay? So make sure you close the other pending orders and you stick with one trade. Make sure you set your stop losses. Make sure you set your target levels. And with news releases, it's always good to move your stop loss to a break-even level if you're profitable, just in case market turns around following the news release, okay? At the very least, if you move your stop loss to break even, it's kind of a risk-free situation for you guys, okay? So yeah, my option is actually not to move my stop loss to break even. My option is actually to get out after the initial burst in the market. I think for news trading, we don't want to be too greedy, okay? Sometimes we have to look at it from a situational perspective and kind of measure in, what these numbers are, how do they compare to the consensus. If it's not really a huge surprise, but we see the initial burst, we typically want to get out as quickly as we can just to secure the profits, okay? All right, so this is basically how we use the buy stop and the sell stop. Okay, let's just jump into the charts here. All right. I really do appreciate helpful comments, but if you're not being helpful or, not being considerate to everyone in this session, please, we don't actually need your spam or whatever comments that you have, okay? All right. Let's take a look at the pound USD, for example, here. We're not noticing a corridor volatility. We have news coming up in about an hour's time. But yeah, we don't actually have the corridor volatility. You can see what's going on here. Market is starting to move within a, more of a move to the upside, right? So we actually don't have a corridor volatility for us to use on the pound USD, for example, here. But if we go into a small time frame, you might actually be looking at this and say, hold on a second, there's actually a potential for a breakout scenario, because on the 5-minute time frame, there is a little bit of a range that is established here, right? We can actually use that and say, all right, it's bouncing off the same bottom. We can potentially create a sell stop down here, just below the corridor of volatility, all right? If you want to know how to quickly create these pending orders, all you need to do is just right click, go to trading, and then there's going to be a buy limit or sell stop. If I move above market price, I click on that, it will actually show me the other stuff, the buy stop and the sell limit, okay? So I can quickly place a sell stop here. For example, all right, in the next 5 minutes, there's actually going to be a news release. This is how we actually want to cage the market. We want to have a buy stop above the range. We want to have a sell stop below the range, okay? So that's one way of looking at the sell stop strategy, okay? For example, gold, if we go into the hourly time frame, is there actually a visible range that we can see? There's actually a visible range here. The high continues to go higher here, but technically this is actually within the range, right? So just to play it safe, if there's actually going to be a news release happening very soon, let's say in the next 5 minutes, you might actually want to use a buy stop, for example, because we have a little bit of a range here. Those are going to be a potential breakout scenarios, okay? So these are examples on how we use the buy stop and the sell stop. Now, let's move on and let me explain to you the limit strategy first. Okay, so the limit here, if we talk about the limit orders, we're basically looking at previous highs or previous lows. Okay, for example, here you got your previous high happening in the market. Price is way below that previous high, but you look at this current scenario and say, all right, price could potentially go up, test that level one more time, and fail. All right, that would be your observation on this one here. So how do we know that could be a level that we could actually short it? Typically, we use the order block to kind of identify where the potential supply zone or demand zones are going to be. Where do you think sellers are going to be coming in? Where do you think buyers are going to be getting out with their profit taking? This is where the understanding of technical analysis comes in for you to actually be able to use the limit strategy. If you don't understand what's going on, you're not going to have a clue where to actually place the limit orders, okay? Whether it's actually going to be a buy limit, whether it's actually going to be a sell limit, if you don't understand what's going on in the market. So ideally, this is not for beginners, okay? If you're a beginner and you're really interested in knowing how to trade with the buy limit and sell limit strategy, I would highly recommend that you watch the SMC videos that we have done in the past. Okay, so you can just go to the channel and look up SMC. We did 5 webinars across 5 weeks to cover the SMC. That's, to me, a bare basic necessity for you to actually be able to use the limit orders. Okay, but assuming that you understand what's going on, and there's a resistance building up there, we might publish a report and tell you, hey, you know what, watch out for that as a potential resistance. Then yeah, those are going to be where you want to be placing your sell limit if that's going to be an expected resistance. A buy limit if you expect a support to play out. Okay, so in this case, you're way down here. Price is not up there yet, but you think price could actually come back to test that level and fail. That's where you want to place the sell limit. And that's basically what happens here. The trade was triggered and the market immediately reversed after hitting that level there. Now, is there an advantage to using a limit order? I think that's a huge advantage to using a limit order, okay? It's high risk because you're going against the market trend. Unlike a breakout scenario where it could actually be a continuation, a limit order will always be a reversal, okay? The advantage here is if you take a look at your stop loss compared to the potential reward that's available, your stop loss, it's so small. So basically, if you're looking at a risk reward ratio of higher than 1 to 2, 1 to 3, you want to be placing a limit order because you want to be buying at the very low or you want to be selling at the very extreme, okay? So the buy limit and sell limit strategy does have an advantage. There's a risk involved, that it could easily fail, but at the same time, it was offset by the potential of having a very tight, small stop loss. And the reason is it's so close to the resistance level, if not at the resistance level or at the support level. So you're basically buying in at those potential resistance level and support level. Your stop loss is going to be so close to the previous high that it's really small compared to the potential reward that you could have. So if you're thinking about a high risk, not high risk, I wouldn't say it's high risk, high risk to reward ratio, okay, not high risk, but high risk to reward ratio, for example, a risk reward ratio of 1 to 3, 1 to 4, 1 to 5, then limit strategy is basically the way to do it, okay? Okay. Cool. So let me give you a couple of examples in terms of how we look at the limits, and there are actually some very interesting developments that we might actually look at as well. So let's take a look at the Euro USD, for example, here. And the Euro USD, you got two places where you can actually place a limit order. Number one, you actually have an order block up here. All right. That's about 1.0575 to 1.06. That's basically where our potential sell limit could be. So I want to place it somewhere in between, about that level there. And there is also another limit order that we can actually place if we know how to use Fibonacci. For example, here, take a look at what's going on the Euro USD on the hourly time frame here. Price has been failing at the 61.8%. If it's not able to go above that 61.8% level, then yeah, we look at the high there. In the short term, this small block here is actually an order block that's very noticeable on the small time frame. So I'm going to zoom in here and you can see where price fails. It has basically failed twice. Could it fail again? It could fail. So I'm going to place a sell limit about 5 pips below 1.0550. In fact, I think it actually might go a little bit higher. It could potentially go to 1.05 because it's a psychological level before it actually fails. So I could place that trade there on the Euro USD. Basing on this, we actually have two trades that we can actually look at. We expect price to potentially test two more resistance, one at 1.0550, the other one at 1.06. So we might be able to place a limit order. Why we do this is basically we expect price to go up and fail. All right. So that's where we want to have our limit orders. Now, in terms of the risk reward ratio, I can show you here in terms of the risk reward ratio here on the Euro USD, for example, if we're shorting it at 1.0550, right? I'm going to be shorting it at 1.0550. My stop loss is probably going to be about 1.0565 or 70, not really too far there. But target level, I might be targeting support one. Might be targeting the low yesterday. So I might target that. Look at my risk reward ratio. It's 1 to 5, literally, right? Or maybe at 1.06, I'm thinking, okay, if this one fails, I risk 15 bucks. It's okay. I might place a second limit order at 1.06. My stop loss is probably going to be 25 pips, 1.0625. And again, I want to be targeting that low that we have here. Look at the risk reward ratio. Again, 125, 125. So these are going to be advantages to the limit order because you're expecting a resistance to hold or potential support to actually hold. You might actually get in at a really good price, okay? So I could give you an example again, for example, on the dollar Japanese yen. We were looking at this, we mentioned this on the outlook, what if this order block that we have here, it's going to be tested again. It was tested and price bounces off it really quickly on Tuesday, all right? But what if you miss that opportunity and you think price could actually come back down again to about 150? All right, let's place a limit order, maybe at 150, all right, about there, 150, all right? It's still within reason because price has been trading at 150 today, And then our stop loss could be maybe about 148, a little bit lower than 148, but I want to be targeting a lot higher, maybe at 160. On the daily time frame, risk reward ratio of 1 to 4, that is actually pretty significant. You're risking about 2.5 yen for a potential 10 yen. That's significant. That's a 1 to 4 risk reward ratio. So things like this is where you want to be using the limit orders. Okay. Which time frame on the limit order depends on your trades, right? If you're trading intraday, you want to be looking at the hourly max, right? 50 minutes, 5 minutes. If you're trading swing, you want to be looking at the hourly and the daily time frame. So time frame does depend on your trading preference, but we're talking about this based on news trading, right? So we are going to be looking at the shorter time frame. Typically for me, in terms of the corridor of volatility that we look at before news releases, we look at the 50-minute time frame. That provides us enough for the corridor of volatility to kind of activate. All right, the 5 minutes time frame might be too quick. We might not be looking at the corridor of volatility clearly, but the 50 minutes does provide that corridor of volatility. For example, on the pound USD here, if I go into the 50-minute time frame, you can see how it's starting to range, right? If I go into the 5-minute time frame, it might look a lot bigger as well. So before news trading, news is released. In terms of the setup, in terms of what we're looking at for the buy stop and the sell stop order for tomorrow NFP session, we will be on a 15-minute time frame. I don't look at the 5 minutes because I think there's a lot more noise. I will look at the 15-minute time frame. If I'm not able to identify the 15 minutes time frame, I'm not able to identify a corridor of volatility on the 15-minute time frame, I might go into the hourly time frame, but that's it. All right, going beyond the hourly time frame for news trading, it's kind of pointless because we want to be there for a short period of time. We want to get in, we want to get out, okay? Why is your withdrawal rejected? Please contact customer service. Don't ask that here because I'm not able to provide that for you. I'm here to provide education for you, help you with your trading, but those kind of administration stuff, please contact the relevant department. Okay? Thank you. All right. So let's move on. We're going to be nearing the end of this. You can also trade after the news is released, right? Again, trading after news releases, that's where the limit orders starts coming in. We typically place the limit orders once news releases are done and there's still leftover support or resistance that could actually act during the day as a potential support or resistance. Typically, we use that, we use the limit orders for that, okay? But yeah, you can also trade after the news is released. You can trade during news releases. You can trade before news releases. There are pros and cons to all this. The pros for trading during news releases is that you get immediate reaction. Trading before news releases, you're kind of speculating. Trading post news releases, typically it's good, it's safer. You have all those information. You know how to kind of predict where the market is going to take that new information and move the market. But typically you missed out on the volatility. For safety, you're trading volatility for safety if you trade after the news, okay? All right, so let's do a quick test. If you have been paying attention, all news can be divided into two categories. What are they? And what type of orders is most often used in news trading? And also the type of pending orders that we know. I'll just answer the third one for you. It's a stop order and the limit order. We have the buy stop, sell stop, buy limit, sell limit. Okay, those are the pending orders that we just explained. So if you can answer, some of you can answer the first one here. All news can be divided into two categories. What are they? And what are the type of orders that is most often used in news trading? Please type it on chat. I'll give you a minute to give me the answers, okay? While at that, I'm actually just gonna answer here. Which news platform for Bitcoin USD? Bitcoin, to be honest with you, it's not really affected by the fundamentals. They are sentiment driven, right? If risk appetite improves, risk aversion gains in the market, that could actually impact the Bitcoin. But in actuality, in terms of whether or not the FOMC is going to it's going to cut interest rate or high interest rate, it doesn't primarily impact the Bitcoin immediately. Bitcoin, it's more, I would say, community driven, right? There are going to be some crypto news specific out there, but yeah, those calendars that we talk about, it's probably not going to be helpful for Bitcoin specifically because they're not directly impacted. It's more of a secondary impact onto the crypto market. Okay, so you probably need more of a specific, coin research website, that kind of stuff, that could help out. That talks about the regulation of the crypto market that could drive the crypto market up or down. Okay. All right. Since no one's giving me the answer, I'll just answer it for you. All news can be divided into two categories: the hot unexpected news as well as the periodic news. And what type of orders is actually most often used in news trading? The most often used orders for news trading is actually the stop orders, the buy stop and the sell stop strategy. It's a common strategy. It's a common breakout strategy that, even the big funds are still using. Okay, so the most often used in trading, in news trading, is going to be your buy stop and your sell stop orders. Why? Because you don't actually have to monitor them individually. You can set your buy stop, sell stop for maybe 5-10 currencies, and then you walk away. During news releases, it will impact all of them. All you need to do is basically just position management, basically just closing out, the orders that was not filled, just in case, or to avoid whipsaws. Okay. All right. So this is the code again. It's non-farm 2024. Again, the code is expiring on the 31st of December 2024. Make sure you use the code. It's non-farm 2024 to double your deposit bonus. It is a 100% deposit bonus, so you can actually use that to kind of help out with your margin as well. In terms of whether or not you can actually withdraw it, please contact Octa's customer service. They will be able to explain a little bit more in details in terms of what the terms and conditions are on when you can actually withdraw those bonuses. Okay, I believe there are certain lot size requirements that needs to be filled before you can actually withdraw the bonus. Okay, but you can use that to help out with your margin while you're trading. All right, so last minute questions. Any questions that we have here for tonight before we wrap up the session? Be more than happy to answer anything that's news related, please. I don't answer to weird comments that we actually got on the chat tonight. Really weird. I have no idea what's going on. All right. Since there are no questions for tonight, let's end this session. And I look forward to seeing you guys on the NFP live trading session, which is going to be tomorrow, Friday, the 6th of December, 2024. With that, let's end this for tonight. Good luck with your trades for tonight. And